Great. Welcome, everybody, to the Sunday stream. So today, I got a lot of things to talk about. And the first one being the big one will be crypto contagion and Gemini. And this is concerning, but I think there's probably a darker hole going through in the background. I think it's going to be more important to talk about what could potentially happen. Also, we'll bring back a fan favorite clown news as we talk about Nobel Prize winner Paul Krugman and his assessment of crypto. And lastly, I'll tell you the good news. So just stick around. And of course, last, we'll do a little Q&A. So first things first, crypto contagion and Gemini. And here's what's going on that came across. So crypto broker Genesis owes the Winklevoss Exchange's customers, which would be Gemini, about $900 million. And like we've been talking about in the show for quite some time, there's been quite an issue with contagion, especially with what's going on, of course, with the FTX collapse, which started with really Three Arrows Capital, and a lot of dominoes have fallen. Now here we are. So here is what's happening with Gemini, which is not surprising. I think people will take a look at this, and not that they've filed for Chapter 11. It's not what we're talking about, but you can just see how this domino is teetering. So here's what we got. Digital asset trading group Genesis, the one that is essentially almost going through Chapter 11, and its parent company, Digital Currency Group, which is huge, and we'll get to that in a second. Owe customers of the Winklevoss twins crypto exchange $900 million as the collapse of FTX. Gemini's bid to recover the funds underscores how the crypto lending market, where investors lend out their coins in exchange for high rates of return, sits at the center of the industry's credit crunch. Genesis, the main partner. Let me say it again. Genesis is the main partner in Gemini's Earn program. If you're not familiar, it's where retail investors, people like you or I, lend out their coins in exchange for a fixed stream of returns. And I got to tell you, I don't see that really coming back in mass. I mean, we saw the problem with Voyager. First, we saw it with Celsius. Now we saw it in Voyager. And now, of course, here we are seeing it with Gemini. Gemini halted withdrawals from the scheme last month. The scheme. I guess you can say it like that. It's kind of a very, very negative way to say it, but it is what it is. Gemini has now formed a creditors committee, which, how many times have we heard about this? To recoup the funds from Genesis and its parent, DCG. Genesis has been scrambling to raise funding and has hired investment banking boutique, Moelis & Co. Let me just talk about Moelis & Company real quick, and then we'll get to DCG and why I think this is a bigger issue, what's coming down. So Moelis & Co., it's a banking industry. It's a New York-based investment banking giant. They launched a global blockchain group that will provide advisory services to blockchain and crypto firms, which I got to tell you, pretty good time to do that since everything is collapsing. Not everything, but the ones that were swimming naked, we might say, is having issues. And if you remember who Moelis is, Moelis & Co., they've already dipped its toes in the sector with recently bankrupt crypto lending firm Voyager Digital, acquiring its advisory services at the start of July, following its ill-fated temporary suspension of withdrawals. I got to tell you, I think I'm in the wrong business. I should just go into advisory services, because it works or doesn't, you still get paid. So that's, if you remember Moelis & Co., I'm sure they're doing great things behind the scenes, but, Voyager. Now, DCG Group, who are they? And we've talked about this before, but the DCG, or Digital Currency Group, they've got their hands in a lot of things. And this is the one that really concerns me. Here's their subsidiaries. Genesis, the one we just talked about. Grayscale, the one that has the Grayscale Bitcoin Trust. CoinDesk, Foundry, Luno, TradeBlock. These are the subsidiaries, HQ. And of course, if we take a look at the portfolio, I mean, it's massive. I'll just do this real quick. It's so big, it's got, and this is just investments that it's done. It's so large that it has, it's alphabetized. So Aber being one of them, Akala, Artie, Avro, and Axoni, big time studios, so on and so forth. So DCG, just to get into it, this is the one that concerned me. Of course, we talked about Genesis. What really concerned me about Grayscale, but they say they're okay. I mean, that's what every centralized player has said so far. And then Foundry. I'm like, what's Foundry? And then we talked about this before, but Foundry, if you take a look at bct.com, explore.btc.com, you can take a look at the pool distribution. You know what the largest pool is right now in the world? Foundry, 23.44%, good old US of A. So when we talk about contagion, things that are going on, I'm not saying exactly that everything's going to collapse. That's not what I'm saying. I'm just saying that there's a lot of interconnectivity with a lot of things that are going on as everything started with the collapse with 3AC, and it may be that FTX was more of a heavy hand than what we realize, and the truth is going to come out. But I see this as an issue moving forward, especially with Contagion. That's why I'm not really certain that we've seen a bottom. Anyhow, so moving forward in this article, DCG itself owes money to its subsidiary Genesis. These intercompany loans have complicated the picture for creditors. They're just moving funds back and forth. Oh, you have a problem? We'll cover that. Oh, now you want to give us the money back? You don't have the money back? That's okay. We'll just loan it over here, and we'll keep going down. And maybe at some Damn, they shut me down already. Sorry about that. That's beautiful Puerto Rico Wi-Fi. My apologies. Over the summer, Genesis lost $1.1 billion on a loan to collapse hedge fund 3 Arrows Capital. DCG took on Genesis liabilities in the process, subsequently owing $1.1 billion to Genesis. And of course, DCG declined to comment, as well as Genesis declined to comment. And that's pretty much where we're at. So look, I don't know what's going on in the background, but it's just concerning to me. Let me know what you think in the comment section. Do you think this is a big deal? This isn't really a big thing. This is just a Sunday in crypto, no big thing, carry on citizen, or do you think this could potentially be something massive? Anyhow, what you think about that in the comments or the live chat. And now let's get into a little brevity, as I like to call it, which is clown news. And I do this because you have to understand, don't take yourself too seriously. It's going to be all right. This is just how things work. And here's what we got. So Nobel Prize-winning economist Paul Krugman, which I have no problem with. I got no problem with Paul. Just some of the things he says the crypto era may be ending. Fascinating. So here's what. Paul, Nobel Prize winner, has an opinion that the crypto era might be nearing its end based on the fact that his most recent anti-blockchain piece attracted very little crypto bro outrage. I guess that's a good way to quantify it. Krugman argues that the term crypto winter, which is widely used by the media to describe the ongoing crisis, might be an understatement. I actually have to agree with him on this one. I think it is an understatement. I think we're going to see some pretty big pain across the board, but there's good news. I'll get to it. This is according to him. Krugman claims that blockchain, the tech that underpins Bitcoin, has proven to be basically useless. Distracted by the headline-grabbing FTX drama, many people failed to notice that many institutions starting ditching blockchain after attempting and failing to use it for solving real-life problems. And he goes on to talk about how a data shipping giant Maersk recently abandoned its enterprise blockchain project that was supposed to improve global trade. Look, not all going to work out. In January, the prominent economist wrote that Bitcoin had virtually no legitimate users, which I find interesting because if you look at, there's a great website in the block. I don't have a link or anything, but it's a great website. You should check it out. Here's a token summary. I find it fascinating that who is in the money, who is out of the money. Now, right now, as for where we're at, we're in December 5th, December 4th, 2022. You have more people out of the money than in the money. And what's also interesting is that the holder's composition by the time held, or how long you've held your Bitcoin, 68% are a year or more. That's a lot of people holding Bitcoin because they believe in it. They think it's going to do well, and they think there's little utility moving forward. And that's what we got. Also, if we're talking to look at like crypto itself, I mean, just take a look at stable coins. Stable coins, I know people sometimes say they're S coins, whatever else, but if you're making $300 per month in a third world country and your government inflates it away and you can use the blockchain for stable coins, I think it actually works out pretty well and you can actually retain it. Also, crypto itself, I like a project called World Mobile Token. It's built on Cardano, and they are bringing connections to the unconnected. telecommunications to people who don't have it. And it's actually working right now in Zanzibar, in different little island places here in Africa. And you got a total network consumption of almost a terabyte, 966 gigabytes, which you think isn't much. But remember, when we first started with internet service, nobody used that much either. So I got to applaud that part. Also, take a look at Bitcoin. I'll take a look at Ethereum and the different layer one solutions and all the things that you can do as far as DeFi and NFTs. Yes, I get that. And then also, there's one that I am totally biased. It's Sweat Economy. The Sweat coin is 100% free. And I just paid out 50 Sweat coins, which you can use to redeem different items on the app itself. Or if you're out of the United States, you can cash them out. If you want to join that, all you got to do is walk and download the app. There's a link in the description. Looks just like this. And that's pretty simple. Every month, I give out winners of 50 Sweat coins, whoever beats me in the daily walking challenge. And that's it. So again, let me show you anything about that in the comments section. I just find it fascinating that this gentleman here, Krugman, talks about it, even though it's not like he's been 100% correct all the time. Krugman also said this. By 2005 or so, it will become clear the internet's impact on the economy has been no greater than the fax machines. So take it with a grain of salt. That's why I like to hear from Krugman when he talks about technology as an economist. I love it. Great insights. And that's what we have. So again, let me show you about that in the comments section. And remember, the things that are going on out there, the people who talk about crypto, take a look at their track record, see where they're at. And that will conclude that one. Now, I know we talked about some bad news and some possibilities that could potentially come on the pipe. Doesn't look too great in certain situations as far as contagion. Let's talk about some good news. And that is with this. Bear markets are here. I think we can all agree on that. How long do they last? Well, not that long. It seems like it's forever. This is from iFast, link in the description. Bear markets historically precede multi-year bull markets. And just to break it down, however you want to quantify this, bull markets are associated with rosy or healthy economic activity, where prices have risen by at least 20% and expect to continue to rise. Bear markets are the exact opposite. They drop 20% and we expect them to continue to go down. So this is a great one. Chart 1, S&P 500 index, and we can see index bull and bear markets. One thing you'll notice is that data can be manipulated. This is true. And of course, you can make this look super tall and super short. It doesn't really matter. But just remember this. The average bull market average is 1,162 days. And that's the truth. Average return is about 137% during the whole bull market, not in like a day. Average bear market, about 225 days. Average drawdown, 31%. Does that mean that it can't go longer? Well, it's an average. So of course. So just remember this when you're going through the bear market, like we're going through it right now. It's normal. It's a cycle. It's not a big deal. And bull markets don't last forever, right? I think we learned our lesson. I learned my lesson in 2017 and then 2018. People are learning the lesson now in 2021. And of course, 2022, they're learning, hey, these bull markets don't last forever. Neither do the bear markets. So again, this is an opportunity to do what you want to do as far as accumulation or selling or what do you want to do. I can't tell you what to do. I'm not a financial advisor, nor your dad. But the data doesn't lie. And there's some short times. And also, if you even take a look at it a little bit clearer, here's the U.S. bull and bear market cycles. I'm a homer, an American, so I always talk about U.S., just how it is. But this one over here for iFast, it only goes down to 1950, or go backwards to 1950. This one takes it all the way back to the Great Depression, 1929 to 1939. And you can see that even the Great Depression, I mean, it was a long time, let's be honest, 33 months. Then we had a little bit of a run. Then 61 months it lasts. But ever since then, you're looking at a downturn of a bear market of roughly about 2.5 years or so. 2.5 years maybe. 37 months here. Of course, this was during World War II. Hopefully we don't get into... Even if we went into World War III, look how long this bear market lasted. 3 years, roughly. Not too bad. 14 months for the 1950s, 1960s, 6 months, 8 months, 18 months, 21 months in the 70s, 21 months. And of course, this was one of the bigger ones, 31 months for that 2001 collapse, for the dot-com era. And then, of course, the big one, the Great Recession, 17 months, which I think is not bad, honestly. Maybe a little longer. But just take a look at the bull economic expansion. And that's it. That's the good news. So don't get too worried about things. I mean, things are going to work themselves out over time. It just depends on your time horizon. If you were here to be the next Dogecoin millionaire, I'm not surprised to tell you that it's not going to work itself out so far. But given an adequate time horizon, things should work out okay. And this leads me to my last point, balance. You don't have to do this. You can put all your money, all your eggs in one basket. You can buy, let's see, Dash. I don't know. And hopefully it outperforms everything in the market. I'm not sure. Maybe it will. I have no idea. But for me, I just try to balance things out. And this is my portfolio balance. I try to diversify as much as possible. I'm in a lot of cash right now because I expect more pain. I expect next year to be either a soft landing maybe or a heavy crash landing, depending on what the Fed does. I don't know. But I think that we're going to see some pretty lower prices on a lot of assets, one of those being real estate. So cash is heavy, 1% into stables, 5% in some degen plays, which Sweatcoin is one of them. 4% into Masterworks, fractionalized shares of art, 5% in land, 35% in real estate, 5% in my business, Amazon, 15% in crypto, staking, 1% in the iTrust Capital, and 5% equities. And also, I'm unsure about the housing market right here. And right now, we're even talking about selling one of our rental properties here in Puerto Rico. I don't know what's going to happen, but I'd rather be a little bit cash heavy as things starts to subside than anything else. But we'll see. And then also Masterworks, I've got Banksy and a Basquiat. I'm doing pretty good, 40% up over a year. Here's the performance of fractionalized shares of art pieces. Not bad. And then just so you know, art is crushing traditional stock market, and it's also crushing crypto, just so you know. And they just sold a bunch of art pieces. Bunch of art pieces. One of those $1.5 billion worth. And just so you know, I know this may put some people's minds at ease, but it's registered with the SEC because it is a security. And good news. I'm going to have somebody from Masterworks come on the show because people have questions like, hey, how can we trust you? And second of all these paintings that you buy, where do you store them? Where can I see them? What's happening? You're going to rug pull us? It's a great question. I'll bring somebody from Masterworks on. They'll answer all your questions. But again, they are registered with the SEC. Take that for what you will. And there's a link in the description. Looks just like this, and you can find out all the information about that. But again, to reiterate, to make this crystal clear, I don't have 100% in Masterworks. It's very small diversification. That's all I'm saying. That's it. So look, that's it for today for the news. Thanks for stopping by. And if you want to, first of all, you're getting out of here. I don't know if the World Cup's on, but games are looking pretty good. So you got to take off, watch football or soccer, or, American football or soccer. Get out of here. You've been here for 18 minutes or so. Now, if you want to go over the Q&A, I'll answer all your questions to the best of my abilities, and we'll go from there. If not, thanks so much. I appreciate you for stopping by on a Sunday. That's awesome. Now let's get into a little Q&A, which is my favorite part of the show. And here we go. John Cutter had a good point. Every day is something new. It's something new. And I think that's a negative one. But expect this to keep happening. Expect this contagion to happen. So in all honesty, don't be surprised when it does. Focus on the things you can change, on the things you can't change. You can't change these companies collapsing. You can't change the markets imploding. But what you can